Welcome back, everyone. This is our weekly gold review. My name is Angelo Zitis, and this week's title is Gold Bears Stomp for Dominance While Bulls Vow to Return. Gold continued to move lower since the opening of the current week, after various geopolitical matters may be turning to the positive, and thus removing some economic risk from investors. The trade matter and geopolitical tensions that have been the main drivers for gold in the past weeks and months will be examined in this report, along with any potential market moving events for gold this week. Starting first with the trade front, which is currently in the epicenter of news due to the signing of the Phase 1 deal taking place tomorrow. Gold prices may react substantially to the downside as the market observes the signing of the deal, due to the fact that many traders like to have confirmed updates prior to taking action and placing orders. Since the past week, the financial markets have been in great anticipation for the event, which is now turning into further optimism. In addition to the signing of the deal yesterday, the Trump administration cleared China off the currency manipulator status that they kept until now, boosting further the opportunity for the two sides to view each other as an ally rather than a competitor. Evidence to the pre-mentioned is also the strengthening yuan, which has been moving higher abruptly in the latest sessions. Furthermore, gold prices may be pushed downwards by the latest upbeat financial data coming from China. Chinese exports and imports have risen substantially as of the data released today in the Asian session. The Chinese trade balance has also increased, yet missed expectations, leaving further room for improvement. The idea that connects the news with the general positive sentiment and gold's trading activity is that the improved financial data from China could be an indication that the global economy could be improving as a whole. China is the second largest economy of the world, plus is considered an emerging market, and with its strength being displayed, it helps uplift the general sentiment. We have seen positive news from China energize gold traders in the past, and so we maintain our opinion that this may also be the case for the present and future activity of gold's price. The Middle East tensions between US and Iran have definitely not been resolved yet, and further conflicts are possible. Despite gold having a strong upward run on the updates from the region in the previous weeks, new reports implied that the Iranians had no intentions of killing American personnel in the rocket bombings that took place in Iraq last week. Their intention was to destroy American bases. Even though the news was not a major relief, it has eased the tensions somewhat. In our view, the matter remains highly unpredictable, and things may get better or worse at any moment. We also see the chances of the two sides negotiating a deal between them as very difficult, due to the harsh stance they keep towards each other. We expect this matter to return and affect gold's price in the future, as the US announced fresh sanctions on Iran in the previous days. Finally, we make reference to some financial releases that have in the past moved gold's price and may do so this week too. From the US, we get the Philly Fed Business Index due out on Thursday the 16th, while on the 17th we get the Industrial Production Growth Rate and the University of Michigan Sentiment Preliminary Reading. Also on the 17th, some financial data from China, like the industrial output and GDP yearly rate released in the Asian session, may also be of interest for gold traders. As a conclusion, gold's recent recollection lower is set to increase risk appetite for investors to move money to other financial instruments. Caution is advised, as the inner and outer political scene in Iran give the impression that important happenings are yet to come. Our opinion is that the updates coming from the specific topic could continue to be gold's driver and could also form its direction in the following weeks. Moving now to our technical analysis. This is gold's 4-hour chart. Now, gold is currently trading between our R1 1552 level and our S1 1540.8 line, still moving in a downward motion. In the latest sessions, gold has constantly tested the S1 1540.8 line that was also tested back on the 9th of January, but was unable to clearly break lower in all cases. However, if the downward momentum is to continue, Then the next possible step lower could be the S2 1530 level that was last tested on the 2nd of January. Even lower, the S3 1518.20 line that was tested constantly on the 31st and the 2nd of January is also possible. In the opposite direction, if gold moves higher, it could initially test the R1 1552 level last seen yesterday and attempt to break higher. The next stop higher could be the R2 1560.60 level last tested on the 13th, while a move even higher could send the precious metal to the R3 1573.05, which is also imminent, as it was last seen on the 8th of January. Also note, the RSI indicator below our chart further displays the current bearish momentum, and due to the fact that it has not reached the 30 level yet, there is still room for the momentum to continue. Now, if you've heard something in this report that you found useful, make sure you apply it to your trading. That's the whole point. Thank you very much for your time. We will see you next week.